And then on the economic side, one of the big things is, I continue to say this is like the number one debate in finance right now, inflationary or deflationary environment in the short term, and then inflationary versus deflationary environment over the long term. Where, one, do you come out on that? And two, how do you think that affects the market?
Yeah, that's a great question, and definitely the question of I think the year. Just from an economic standpoint, I mean, you're looking at 20 to 30% unemployment. Retail spending has been the lowest it's ever been on record. Factory output, I think, hasn't been this low since World War II. There have been local government, state and local government shortfalls. Travel has been decimated, and the S&P is slightly down, if not up, right? And so, we're obviously seeing massive spending. The Fed has expanded its balance sheet, 9 trillion plus. And so what that tells me is, for those that are familiar with the Cantillon effect, is a lot of this just hasn't been circulated into the economy. We haven't had, prices reflect this fresh supply, and it may very well just be absorbed and show no changes. Like Japan has been printing forever, and they're still in deflationary stagnation. And the reason is because even though we try to illustrate economics through various equations like MV equals PQ, we can't apply physics equations to the economy. It is not the problem with economics that tries to present itself as physics, is that there are often many solutions to market problems, and the inverse is also true. One solution can work for a variety of different markets. And the reason is because the relationship between different parties within the market are not readily apparent or understood. And so you see a lot of exotic, derivatives. You see a lot of interesting, reshuffling of, balance sheets and just a lot of things that are not readily apparent. So to think that it's going to be a seesaw where you have one movement cause something else on the other end, I think is naive at best, if not, ignorant. But there are speculations that we can make in terms of what will happen short term versus long term. Short term, prices are going down, people aren't employed, they can't spend. Even if you're giving them a $1,200 check for a month, it's not going to stimulate the economy the way you think it's going to. And so that is, of course, what we know is deflationary, and as a deflationary environment. And we haven't applied this to Bitcoin just yet, but to give the Bitcoin angle to this, if prices are going lower, and you can go to Hawaii for $50, and I'm exaggerating, of course, but the US dollar is stronger. Your purchasing power goes up in these environments, right? And so Bitcoin's narrative as a store of value all of a sudden is not as enticing. But what we foresee is that, a lot of the printing that we're doing now is going to have ramifications down the line. These things compound, and that's when Bitcoin becomes, a more attractive asset class, at least in the U.S. Now, this isn't the case for weak sovereign borrowers that are, have their debt denominated in U.S. currencies, who have to stimulate their economy in order to just maintain supply chains, and as a consequence experience hyperinflation. This is happening now, regardless of whether or not the U.S. is going through a deflationary, period. And what are they going to do? Rely on swap lines when they don't even have a reserve currency? Like, it's absurd. So I'm just happy that Bitcoin at least gives a lot of these folks the ability to exit or reset.